Welcome back to another video. As we can see, I have a little something different in this video, which is of course my new microphone. I was able to buy it through the little bit of YouTube money that I earned from getting monetized about a month ago. So again, thank you all for helping me improve the quality of my videos, and I hope you enjoy this one. Okay, so of course we're doing a tanker update of the week, and EURN have actually published their fourth quarter results on the 4th of February. And we're just going to go over this first and see how the markets reacted to these earnings. And this is pretty much a representation of how the overall sector is going to perform for their fourth quarter results. Okay, so let's look at their highlights. So sustained, they should say, downward pressure on freight rates, driven by a mix of reduced demand from, of course, the RONI restrictions, lower crude supply on OPEC cuts, and oversupply of available tanker tonnage led to a pretty shitty quarter. Okay, that's pretty much the gist of it all. So they extended some contracts. They're doing a fixed cash dividend of 3 cents per share, and also 50 million share repurchases, which is really nice to see that they see their stock as undervalued right now and think that it's going to go up in the future. Okay, so that's pretty good. And EURN is a pretty well managed company, I would say. Okay. First quarter 2021, 46% of their VLCCs were booked at 16,000 USD per day, and over half of their Suezmax vessels, which again carry half as much oil as VLCCs, were booked at 9,207 per day. And you can take that as pretty much a proxy to how much they will be doing or how much they will be earning in first quarter of 2021. Okay, and freight rate pressure to remain. So the decrease or the crappy freight rates are probably going to remain until crude demand recovery, which is of course tied to the vaccination campaign from second quarter onwards. Okay, and the CEO stated that last quarter of 2020 and the present market conditions are amongst the most challenging in recent memory for crude tanker operators. So these restrictions continue to impact operations and, more importantly, the demand for crude oil. This had led to OPEC extending production cuts, and the market remains unbalanced with too many ships chasing too few cargoes. And this is the crux of the problem in the tanker industry right now. Okay, so as a result, the market remains unbalanced, of course. While some encouraging signs are emerging, like the price of scrap steel driving ship recycling activity, traction with crude consumption returning to more normalized pre-RONI levels is required to drive a return to stock and sector profitability. So, despite these headwinds, EURN remains focused through cycle on long-term value generation, which validates additional buyback focus and vessel acquisition while retaining a strong balance sheet. Okay, and let's take a look exactly how much they earned this past quarter. I mean, it was pretty crappy. Let's try to zoom in a bit more. So, fourth quarter was 138 million compared to 355 million from the year ago quarter. However, the full year 2020 was actually pretty good at 1.2 billion in revenue compared to 932 million in revenue. Okay, and in total they had 472 million in profit from the full year compared to 112 million in profit for the full year of 2019. And they actually lost 58 million this quarter compared to 154 million in the fourth quarter of 2019. Okay, so it shows that these earnings they'll be operating at a loss for probably some time to come before the sector rebalances, more tankers are scrapped, and demand for crude increases. Okay, so again, not a very good sign, but we were expecting this, okay? And actually, the market didn't react too badly. As we can see, EURN, after they reported on the 4th, was actually still up by about like 5.6%. Okay, so people weren't too concerned. It was actually up 6% on Friday. And on the week, we can see EURN were up by 6.7%. Frontline on the week, again, we were up about 8%, close to 9%. NAT on the week, pretty volatile, but we were up by about 6% as well. And DHT actually had the best week, coming in at close to 11% gain in their stock price over the week. Okay, and again, there are some promising demands for oil recovery. As we can see, oil prices have actually hit their highest levels in a year yesterday, okay, which was on like this past Friday. And as we can see, this is a chart of WTI crude, which is West Texas, I believe. And we can see, of course, after this crazy dip where WIT crude was like negative $37. It bounced right back up, and now we're at close to $57 per barrel. Okay, so pretty cool stuff. And we can see that there is an oil recovery going on underway. We can see that there is slowly an increase in the barrel cost per barrel at, like, first it was like $31, then it was like $40, then it was like $46, and now finally we're at like $56, okay, $57, which is really, really encouraging sign for the tanker industry in general. Okay, so let's take a look at, of course, Clarkson's Plateau, which provides a pretty nice update on the spot tanker rates. Again, which are, disclaimer, which are not necessarily the earnings that these tanker companies are actually earning, because a lot of them are not operating in the spot market, but operating in of course time chartered equivalents, which is contracted out. Okay, so but these are a pretty good sign of the health of the industry in general at this moment in time. We can see right here that it's about 8.7 thousand per week for Suezmax, which is even higher than VLCC carriers. I mean, I hypothesize this is probably because VLCC carriers are not needed to store a lot of oil anymore. Okay, so the amount of floating storage is decreasing, and therefore there's a lot of just VLCCs just sitting out there, just unused. Okay, and Aframax was 2,700 this week. And again, we can see this is a graph depiction, so you can pause this and see how dismal the rates are as of right now. Okay, there's a slight uptick, but still nowhere near the levels we have been seeing even a year ago. Okay, so we're still looking for that recovery. And again, like EURN CEO said, it's closely tied to the vaccination campaign and how fast they can roll that out. And of course, that will drive the demand in crude through like increased traveling, etc. Okay. And again, tankers used for floating storage is 6.1%, no change there. Interesting thing is of course tanker deliveries. There was a nice little spike there, but still I would say depressed relative to like 2018 or through to 2020 levels. Same thing for tankers sold for recycling. There was actually an uptick here, and still we can see probably a bit higher rates for tanker recycling relative to 2020 and 2019. And new orders of tankers, actually a decent uptick here. So this is kind of interesting to see, which again is a sign to me that these players are betting on a tanker and oil recovery. Okay, and actually that's pretty much all I have for you in terms of the updates on the week. But I actually have something a little bit extra. One person actually commented saying that I should do a little bit of mathematical calculation to decide which tankers is actually the best to invest in, clearly from an objective standpoint. Okay, so I just started on that journey right now, and I'm going to show you the results. Okay, so the first one I did was fleet age, which is a really important data point to get. So because you generally want to tend to invest in the newest fleets, okay, because they have the longest longevity and the best ability to have the highest profitability for the most amount of years, okay, before these tankers have to be scrapped. And the average age of a tanker, I would say, is in between 20 and 30 years. I think it's pretty variable based on like if they have scrubbers on their ships, etc. But anyways, we can see NAT has 23 ships, Frontline has 68 ships, and DHT has 27 ships. And based on solely on this analysis, I'm really liking Frontline, okay? Just because they have 68 ships, and we can see that the average age for this was Frontline is 2014. So that's the average age of their ship, not the average age of the ship, but the average year that their ships were built, okay, in 2014. Okay, so you want a number closer to 2021, obviously. We can see NAT has the worst age at 2007, and DHT has the second best at 2011. Okay, but what I really like is that, DHT has a lot of ships, Frontline has a lot of ships at 68 ships. And if we're comparing just the market cap of these guys, we're seeing Frontline with the most amount of ships. They have like a 1.3 billion market cap, compared to DHT, which has like a 1.02 billion market cap. Okay, so you're paying like about like 200 and about 280 million more for like way more ships. Okay, and they're also younger ships too. So just based off of this analysis alone, Frontline looks pretty good, as it has the most amount of ships that are also the youngest. Okay, so I'll be doing more analysis like this in the future. I'll be adding on, definitely stay tuned for that. Definitely let me know what you think of the mic and if you like the audio quality. I think it's pretty cool. I really like it. I'm impressed with it. Again, we're just trying to create better content for you guys. And yeah, let me know what you think about this. Take care. Have a good weekend. Well, Sunday, I guess. And I'll see you next time. Love you all. Again, be sure to subscribe and like if you haven't already. And I'll see you next time.